Hello, everyone. This is Noah and John, and it is Friday, and we got a holiday Labor Day special weekend report, don't we, Johnny?
Yeah, it's something to watch while you're at the beach, perhaps. Maybe you're kicking back in your Catskills cabana and you're just curious what's happening in Manhattan and the
It's
markets. We got you covered.
Saturday morning cup of Joe kind of thing.
That's
I
right.
hear what you're saying. All right, well, we're gonna change it up, John. It's a slow Labor Day weekend. We're gonna change it up, and I want to focus on some price action charts here, specifically median sale price. Okay, and we got some different charts for you today. So we're gonna take a step back. We're gonna make you want it, and then next week we'll go back to the regular format. So we're gonna change it up just a little bit. And when I'm looking at median sale price here, I notice a couple of things, but the biggest thing I want to notice is the drop, right, John? Because everyone's asking how much we down. These charts show everything. We're even showing August. So
Hey,
like we're
Noah,
showing.
why are those bars gray?
Well, I'm glad you asked that, John, because everyone's been asking us to fill in the gap. We used to show accurate sales charts at a 2-month delay. So we would only show June, which is verified, and there's enough time for all those sales to go into those buckets. We have a good picture because it's complete. The
Right.
glass is full, right? So everyone's asking us, well, what's happening in July? What's happening in August? And my answer of, well, it's too soon. We have to wait. It could only go for so long. So we're putting those bars up, but we're putting it in gray. We're saying incomplete, meaning that the data is not fully in, but you get to see for yourself where the trend is
hmm
and which way it's going to go. So important thing here is I look at where we were before, John. Okay, let's just go to the point here. We're at 1.172500. We go down in June to 970. That's a 17% drop. 17% drop. So that makes sense for like a COVID type of cliff dive, right? And now we've bounced off that bottom, 1,087,000. That's about 7% off the high.
Yeah.
So we dropped from 17% off the high to down to 7% off the high right now. Now, where we're going to come in at the end of the day, we don't know because these are changing. But it's interesting to get a sense that fear COVID, right? You know what I'm saying when I say fear COVID, right? So shut down COVID, fear COVID. It looks like it's 17% for median sale price. Price per square foot was about 12%.
Right.
Median sale price is showing about 17%. If this was average sale price, I bet you it would be like 20 something percent, because that would have the outliers in it and be more sensitive and more dramatic, right? Median's a little smoother. But regardless, it's interesting to put a number
Yeah.
on how much we're down and how much, more importantly, how much we're not down, right? And what I see here is that we just dropped quickly and we bounced right back. So for any buyers that are thinking that Manhattan's on sale across the board, hey, you got to go back into time and place to get those deals that were down 17% on median. So when people are saying that, they're seeing 7 to 10% discounts, 12% discounts here and there, and that the biggest 15, 20%ers, those are few and far between. They're not really seeing them anymore.
Yeah, I totally agree with you. And I think you said a couple of very interesting points. Number one is in this day and age where data is sort of scarce simply because the market's been slow and it was in lockdown for quite a while. A lot of these charts are more helpful for what they don't show than what they do show. I think that's an excellent point. We should be focusing on that here and there. The second is I'd like to point out one of the reasons why this chart is so valuable is because, once September ends, and it's hard to believe it's actually September, but it is. But once that ends and the quarterly reports come out, these are the charts that your clients are going to be seeing because everyone's going to be publishing them. And these are, sales-based charts. So this is just an early look at what those charts are and let you see around that corner. And that's a huge advantage. Get an eye on that trend.
Yeah, and get ahead of the curve. That's right. So now we got some special charts. Okay, so now we got to step back out of the UrbanDigs ecosystem. John, show us what you got going over here. These are your charts.
These are my charts. So basically what I'm doing is I just want to look at the median asking price. And I could have gone back, multiple years, but I just want to kind of keep it tight. So it's like looking back to 2017. Each of these lines is a neighborhood, except for that sort of aqua line at the bottom. That's Brooklyn. That's the median asking price for Brooklyn. And I want you to notice sort of all of these neighborhoods are all starting to take that hit for COVID. But Noah, do you see anything different about this chart on those bottom two lines?
Yeah.
Well, that line's Brooklyn, and it's going straight. And the line
Brooklyn's
below
holding
that
steady.
is
Right.
right. And the line below that is Upper Manhattan, and it looks like it's hardly affected. Why do you think that is? Any
Well,
idea?
obviously the supply demand equation is different, and obviously the level of sellers that are just cutting their price to sell is lower in these areas. I mean, I can't think of anything else. Those are the forces
Well,
are different up there.
you're close. I think you're right. I put you on the spot there. But I'll
Thanks
tell
for
you
putting me on the spot.
what I think is I think this is a very price point determined market. The lower price points are vastly outperforming the upper price points right now. So
Yeah,
when you look at Brooklyn, which on average is a much lower, not much lower, but it's a lower price point than Manhattan, it's
yeah,
doing great compared to Manhattan. And same with Upper Manhattan. It's just a lower price point. So you're
yeah.
just seeing more demand relative to supply in these neighborhoods than you are in the other main neighborhoods of Manhattan, which are slowly starting to decrease their price in response to this lack of more expensive demand.
Yeah, Occam's razor. I mean, it's the simple reasons, the simple explanations that are always the right ones, right? So this is median asking price. So this is really telling. So the sellers are really starting to come down in those neighborhoods, and not so much Brooklyn, Upper Manhattan. Awesome.
Yeah.
Let's break this down a little bit. There are sellers out there that are wondering, how much do I potentially need to cut my price? Well, we did the hard work for you, right? And John, what do you got over here in this chart?
So I basically, when I looked at all the main neighborhoods in Manhattan and did the median price cut for all the active listings that have had a price cut, what's the median? And, honestly, I was surprised at how tight that range is. I mean, I'm just like, these are
Right.
main neighborhoods. Upper Manhattan, as we just discussed earlier, is the lowest at 6%, going down to the Upper East Side at 7.7%. I mean, really,
Right.
a 1.7% difference between the two. And that's
That's
a little
tight.
bit surprising. I thought it would have been much wider.
Yeah, and my interpretation from this is an actionable takeaway for all the professional agents that are listening to this, that are looking for a message for their clients. The sellers may not be thinking this. I'm sorry, they may not be asking you this, but they're thinking this is, if I do have to lower my price, how much should I consider lowering my price? Here's the answer, right? I mean, so it's between 6 and 7.7%. If you have a seller that is thinking to lower their price 2 or 3% or something minuscule, you need to sit down and have the conversation of what the I guess the median is, median price cut is in that neighborhood, because it's much higher and it's not going to have an effect. So it's good to actually have an actual range for that using real data.
Right.
Yeah.
And if you'll scroll down one more, no, I think we have one where it shows every single sub neighborhood we have in the city.
Oh boy.
And you can
Yeah.
see that it's, as much as price point is determinative in this market, so is location. I mean, every location tells a different story. So you can see here, I mean, they're all still somewhat close together with the exception of Two Bridges. I don't know what's happening in Two Bridges, but, pick it up, guys.
Yeah,
But,
there's probably only a couple of transactions going on there. But what sticks out of the head, obviously, you got the range somewhere between the fours and the nines.
yeah.
The main neighborhoods tighten that up to the 6s to the 7s. So that's really interesting. And I'm looking at some of these down here: Midtown Center, Carnegie Hill, Upper East Side. They're at the higher end of the range. And as you would expect, Upper Manhattan is at the better end of that range. So this is really interesting.
Yeah.
Median
And
price cut by neighborhood.
you look at the top here, Roosevelt Island, Inwood, Fort George. I mean, these are some of the more value oriented areas of the city. And, sellers don't need to cut as much there.
Yeah, very interesting way of looking at it. Okay, so we're going to move on to another chart. This is my chart, right? So this is what everyone was asking us is about median asking price and median sales price, and that trend over time. So we went back to 2015, so we got a 5-year look over here. And we're showing you the spread. We're showing you the trend and the spread between the median list price, which is this top blue line, and the median sales price. And this is really interesting, John, because I want to talk about this for just a second, right? So 2015, a lot of people look at 2013, 2014, 2015 as the golden years of Manhattan real estate, that low inventory seller's market environment that peaked in 2015. And then we had a correction down to 2019. And then, of course, COVID came. But when I look at this, I see levels. Right. And again, this is asking prices. So I'm looking at this right over here in January 2016, and we'll call it stage 1. And this is like, to me, aspirational sellers. This is exactly what you're going to see after the peak, right? And the sellers haven't figured it out yet, or they're in denial. They don't want to believe it. And they keep raising their asking prices and they're not getting it anymore. And it takes them some time to get down there. So when does that change, right? So I look at that. And I look at this downfall right over here. We have one downfall over here, okay? And we're going down over here. And then we have another fall, right? So this fall right over here is bringing us down to a whole new level. So this is like, realization number 2, right? So this is number 1, the peak, and realization number 2. And then it took a little while at this realization after sellers came down and they were at this new level for a while, okay? And you can see it right over here. And then it looks like we had COVID. And
Yep.
that was realization number 3. And sellers came right down. And it's starting to flatline a little bit. So it's interesting to look at it from this perspective, especially when you look at the duration of all right, when did sellers start to get it from the first peak? How long did it take them to get down there? And then how long were they there until the next wave down? And then how long were they there? And they were there a long time, years.
Yep.
But this time, the COVID, the sellers that had to sell, they just lowered their price and now we're flatlining. So the point is that we might be seeing a little bit of seller exhaustion, a little bit of seller exhaustion. They lowered their prices already. Is COVID priced in? And I would argue that I think it is. It's at least 80-90% priced in. I'm not saying we're not going to have a down move from here, but buyers are pricing in the COVID deflationary forces and sellers are dealing and adapting to the COVID deflationary forces, and they've already lowered their asking price, right? What's interesting about this is the spread between sales price and asking prices. It hasn't really widened. You would expect to see that sales price fall. It hasn't really fallen that much yet. And I guess we're still waiting for all that to come in. So the spread right here is really, it's more sellers bringing their asking prices down to where the market is perceived to be.
Right. That's a very interesting chart. And I also want to point out on that bottom red one, that's the mansion tax spike. And
this right over here is the mansion tax. This is mid 2016.
And so the parallel here is that spiked up due to, change in regulations. It spiked up, made the statistics all weird because it looks like it came right back down, but really before and after it's sort of, kind of going sideways. And it's a lot of the same thing here with COVID. I mean, if you look at the long term of the median sales price, it looks like a very stable market to me.
I guess
drops, but
the overall takeaway is that we're not falling off a complete cliff in terms of sales price. That's not showing at all. We looked at median sale price broken down by month, and it showed about a 17%, very quick, very swift fall, very short-lived. We were there very, very, very briefly. Right. We came right back. We bounced right back. So the market's trying to find its way, John. The market is trying to find its way. It's been illiquid. It's been dislocated for 6 months. I guess 7 months now. All right. It's going to be bouncing off the bottom here and there. It's trying to find its way. We're going to have to be in price discovery for the next 4 to 6 months. Expect volatility. Don't look at anything as a trend. So when I looked at that price, that bounce back up in those gray bars in the median sale price that we looked at to start this segment, that's too soon to call anything a trend. And you want to expect volatility. So we might bounce right back down the next month. And that might happen for the next 4 to 6 months.
Yeah, I mean, don't forget, the school situation is still uncertain. A lot of people's work situation is uncertain. We have a presidential election coming up. So it's definitely too early to call it a trend. Great point.
That's right. So with that, we are going to end it. This has been a different look on Manhattan real estate. I hope it was useful. Until then, happy Labor Day to everyone. This is John Walkup, the Chief Research Scientist of UrbanDigs. We love him. This is Noah Rosenblatt. I am the CEO and founder of UrbanDigs. If you want to get access to us and our experts, you go to our forum. We will answer all of your questions. Until then, happy Labor Day, and we'll catch you next week.